I'm joined today by Ed Pettinella, President and CEO of Home Properties. Ed, Home Properties has a relatively tight focus in terms of its properties and the locations of those properties. Can you talk a little bit about that strategy and how it served the company?
We moved into high barrier markets specifically about 5-6 years ago, and the bulk of our portfolio is from Boston to the DC region. And we're pretty much situated in the suburbs, not in the urban areas, and that seems to have insulated us much better than most from the recessionary period. So we're very happy with our strategic locations to date.
And how do you expect the major macroeconomic factors that are at play for your company to play out into 2010?
Right now it's very difficult out there with unemployment at 10.2% and negative GDP growth. For us, we seem to be very well positioned. We're low to middle income. We are housed in suburban markets that are more protected from the market in a recessionary period. Our turnover is one of the lowest, if not the lowest in the industry. So we're positioned very well. I think next year will be more of the same. I don't see a real turnaround until the second half of 2010. For us, I would think it'll be a similar situation. We'll finish very well in terms of same-store NOI, but it'll be a difficult year, probably flat, slightly negative, which will be very similar for all of us, publics, all 12 of us.
And what steps has Home Properties taken to stabilize its balance sheet?
A number of steps. We were the first one to have our line of credit renewed in 2009. We did that in August, so we got a larger line. We rolled over about $250 million through Fannie and Freddie. And the equity window is open for all of us, and we're continuing to look at whether we'll do an ATM or an overnight slug of equity, but that's most likely in our future too. So with all those capital market tools, we have plenty of liquidity, our balance sheet is strong, and we'll use those tools primarily when we start to see the acquisitions market pick up.
Speaking of acquisitions, do you anticipate activity picking up in 2010, or what's the status of it?
You know, for us, we generally have done about $250 million of acquisitions per year, year in and year out. Unprecedented impact this year, we'll do none. So it's our intention to start to dabble back in the markets. About $100 million is what's slated for 2010. We're starting to see the markets improve a little bit. It's not great. But we think as each quarter ticks off in 2010, we'll be conducive to doing more acquisitions, which is really critical for us and for all of the publics to get back into sometime during the course of the next year.
And Home Properties also is known for its development activities. What's been the status of your development pipeline?
There's probably 10 of the 12 that are in development. We're probably the smallest player in the segment. We just got in the last few years. We only have 2 projects that are going to be leased up this year, but we don't have a pipeline beyond that that's ready to go. So it's probably good news that we don't have anything coming out of the ground ready to be leased up other than what we have. But we are housed in DC, which is one of the strongest markets in the country. We'll probably look out another year or 2 before we start to really increase the development activity when the economy is much more stable.
Great. Well, we're looking forward to it. Ed, thank you very much.
Thank you.
For REIT.com, I'm Matt Bishar.